There is considerable debt being racked up right now on all levels, personal, corporate, national, and everything in between. We have no idea what the ramifications of such debt are, but every stress test of the financial system has indicated that we have nothing to worry about. Certainly, we have seen a few instances in the past where we were told that everything was just fine, and then it absolutely was not. But this time is different, right? You came here for the truth, so let me unveil that for you. Today we're going to talk about one simple factor, and actually I'm going to show you this on all different levels. It's going to be a lot of different stuff, but remember this right here, and especially the first couple things I show you, because that's sort of the central theme I'm trying to connect. If everything is great, why print? They're telling us on one level that we don't have anything to worry about, that everything is so fantastic, that everything is stable, sound, and secure, and yet they're printing more money than they have ever done before. They're keeping interest rates at the lowest levels ever in history. I'm talking about on a global level too. In general, sure, you're going to have some variances. But this is what they're doing, and they're doing it at a scale that's beyond any reason, and yet at the same time telling you that everything is great. Now there's a clear and distinct disconnect from the reality and what they tell us. So I pose the question, why? Why? I've never heard an actual legitimate response, and yet here we go, day after day after day. I keep showing the wacko, completely insane statistics, and there are those who say, no, everything is great. And I, quite frankly, will continue to output all of the information that you as an individual need to see, and we're going to collect that together because I know you're looking into this on your own and I can do my part here. There's going to be a lot of info. Let's get into it right away. This is the number one thing, the global liquidity proxy. That's the blue line matching up with the S&P, essentially just trying to show you that as they expand the money supply, we have seen stocks go in line with it. If you need proof, you can go back to what I was saying throughout 2018. As the money supply had started to fall, so did stocks. 2018 was a very bad year for the stock market. There was basically no asset at that time, 93% of assets. In fact, in the red, it was very clear. It was distinct. I said, once they do this, it's going to send the market lower. If they reverse that, it can send the market higher. Look at the data. Look at the data. I did videos around it specifically because I kept referencing it in basically every single video, and it is very clear what they do has an effect, except it doesn't necessarily mean, like as you see in February, March timeframe, that the market can't go down. Of course it can while they're printing, but in general, we end up with these whole distortions and dislocations that occur because of what they're doing. The whole reason that the markets are acting like this is because of their activities. This was sent to me by one of my subscribers, and I wanted to clarify something here. Pentagon racks up $35 trillion in accounting changes in 1 year. We have seen this before. You go back 2018, you go back 2019, they give you the same kind of information, and it just tells you essentially that what they're doing here is very clear that they are hiding something. Now, they move the money around. It doesn't mean that 35 trillion necessarily went from one place, went to another place, and now they know where it is. That's not exactly what this is. So the net could be zero. It just means that $35 trillion of money is being moved around. And essentially what the audit found was that there's no real justification for any of the moves. I think it was something like 96 or 98% of all of these accounting changes didn't have a reason behind it. That information wasn't known in the audit. So to me, that is very, very suspicious. And of course, they do these limited audits. You find something so, shocking, as you see, with such a big number, and yet nothing happens. And that's what I'm trying to pose to you today, is that the actions that they are taking, whether this is the Pentagon, whether this is from the Treasury side, whether we're looking at it with the Federal Reserve or any of the other central banks, ultimately they are doing things behind the scenes that the public has no idea what the heck is going on. We don't know. I don't know. You don't know. We get a little bit of data, but things are messed up on such a deeper level. And then you have this huge havoc that is created every so many years. And then they say, well, we didn't know anything about it. Oh, it was that group. It was this person. They burned a couple people and that's it. But ultimately, it's all of these hands that have something to do with it that are actually actively engaging in the fraud and making things worse down the road. Quickly, I just wanted to point this out. Quite frankly, what we are seeing here is that there have been so much talk about we're going to regulate big tech, we're going to split up big tech. Big tech is, taking your this and that, they're against privacy, and yet this is the government telling you that. And the government, if you look at how these different big corporations, I got to be careful, don't want to trigger any algorithms, these are actually set up with funding by the government. It's a joke. They're lying to you. They're lying to you. They tell you that everything is in your favor, that everything is to be there to protect you. And ultimately, they're all part of the same group. It doesn't matter who you see there, the faces, the suits and ties. These are all part of the same group. We've got millions of people that are suffering today. You go to any country, see the same thing right now. A drop of 3 million people off the unemployment rolls doesn't include Americans who had exhausted their entitlement to aid before the official cliff. More than 2 million had run out of benefits through the PEUC program by the end of November, for example. Many of these workers are now eligible for additional aid from the $900 billion relief law, including back pay for any missed weeks. However, some states haven't begun issuing that assistance yet, potentially stressing Americans struggling to pay bills now. There's already, what I've read to you, $6,000 in many cases of rent or mortgage that people need to pay up. And what's this going to do? That the few $100s a week that barely going to get money for people to pay their food and their housing and everything, it's only going to do so much. And at the same time, we rack up the debt, and the debt is all we have to be looking at when we talk about the financial world, because it's something that, yes, interest rates are low, but it is a cause for concern because of the derivatives, because of how the financial system works and how it's all connected. Every company today is changing, and that's the point of this article, the reason I put this article up. Look, Instacart, we're talking about something that relies on the gig economy. It's a tech, it is a tech business, and they're cutting jobs. They're cutting 1,900 jobs, including its only union roles. So the whole point I'm trying to make here is that there are so many changes, and you'll see as I go into the next articles here, how many things will be different from the beginning of 2020 into, let's say, 2022. There's going to be so many changes that occur, not just with the particular businesses, but with migration and so many different factors. Palm Beach draws flood of wealthy home buyers in an exodus that's taking place right now. This is just one of the areas. The chart at the bottom essentially just shows you that the listing inventory of single-family homes and condos has declined. It is just giving more and more of this idea that changes are happening right now. Texas and Florida could become the next business hubs as employers look to flee San Francisco and New York City. More information of what I have shown you in previous videos. The trend continues. How the Miami mayor is luring tech players from Silicon Valley and New York. And you could see right here what's been happening. It's going on all different levels. Yet another billionaire looks like he's buying a house in Miami. You may know of this gentleman here, Peter Thiel, I don't know the proper pronunciation, buying an $18 million island estate. This is just one more to add to the list. Bank of Canada governor isn't worried about a housing bubble. Hot market is different. Don't worry, because it's different this time from the one in 2017. Central banker speaks in an interview and basically talks about how he is not worried about the hot housing market, saying low interest rates and demand for space rather than speculation are behind the price gains. Yes, absolutely. So we're not going to factor in all the fundamentals as part of this. No, what we're going to do is we're going to say that low interest rates are the reason why this is all happening. If you want to know if something is overvalued, you can look at one very simple factor, and that is when you talk about the housing market, how much people are earning. Okay, their income. So let's use the I for that. And we need to compare that to the actual price. Okay, it's all a ratio. And you look at the stats today, and this has never been worse. The amount of income and the prices that people pay do not make any sense, because the income has been on this very, very slight rise. And that is not in real terms. Actually, that's just in nominal terms. And you look at the price of these assets and they're going up like this. That is entirely unsustainable. If you look at the prices in many of these big cities for these, let's say, suburbs, the detached homes and so on, if the price is going to be $1 million, the listing price, the asking price, you're not paying $1 million. You're paying $1.2 million. You're paying $1.3 million, even higher sometimes. They always go for 20% over the asking in many of the nicer areas, not necessarily the best areas, not the most affluent areas, but a nice area with good schools and so on is going to sell right now today, if you look at it, Toronto specifically, approximately 20% above the asking price. Now, the asking price is a manipulated thing, and the real estate agents are completely I don't know the word to use it, but they're, let's just say, disingenuous in what they're doing. By pricing it at a number they know is going to exceed that, they're trying to get pricing wars and so on. It's actually ridiculous and uncalled for and unjust. Anyway, just showing you here that the prices and comparing that to the wages is the number one factor to determine this, as well as if you look at the actual debt ratios, compare the amount of debt that people have to their income, and this is also something that is absolutely astronomical and is unjustified, and unfortunately will end in tears. There's no doubt about it, but not for the time being, because right now everything's okay. Further along in the article, you just see some of the statistics. They gave you a chart in here just saying that, there's everything is smoothly, it's going smoothly, nothing to worry about, everything is just fine. The entire article is written like that, and many, many others are here if you want to check them out. I've seen so many. I don't bring all of them to you, but just do a quick search for what's been happening and you'll see the same thing repeated over and over again. Everything is fine. This time is different. Canada's housing agency says stress test shows only remote risk. So according to the CMHC, they're saying there's nothing to worry about. The CMHC, for those who don't know, is basically you can get insurance. So if you don't have that 20% down, you can actually put 5% down on your mortgage, not a problem. You could put 10% down on your mortgage, not a problem. You just got to pay an extra fee because, that somehow decreases the risk. Anyway, so they're just saying that you don't have to worry about it because they will be able to pay out on their in case there's a problem, in case the housing prices decline rapidly, in case there's an increase in interest rates and so on. This is an absolute joke, because we know time and time again, we never saw this coming. How many times have we heard that? Now, that doesn't mean that that's going to happen today or tomorrow or next week or even next year. All I'm trying to show you is that they lie to you time and time again, and there is no possible way that we should ever believe what they have to say. You take the risks you want, but never believe, never ever believe. Look how unbelievably bad the debt situation is for Canadian households. I mean, they owed an average of $1.71 for every dollar of disposable income in the third quarter of 2020. Of course, that was below what was the year prior. So I guess everything's okay. I mean, come on. This is just unbelievable. The way that they sell it to people. you're in so much debt. But don't worry, because your home is your biggest asset, right? That's all for this video. If you found that informative, hit that thumbs up button. When you do, you're supporting me. All you gotta do is click a button on your screen to support the creator here. Thanks for being one of the less than 10% of people who do that. If you want to learn about e-commerce, I'm talking about selling stuff online, and you want to do so, there's tons of courses out there available to you. They're, $1,000, $2,000 and above for some good courses, definitely. Or you can learn for free at the AmazonGPS.com. If you want to know the financial system, top to bottom, A to Z, everything that you need to know is in these two books, explained in such an easy manner. Now, you might already know what's going on, but maybe you've got a family member, maybe you've got a friend. They should definitely check this out. This is in the link in the description. If you want the audiobook instead, that's available at themoneygps.com. Hang on a second, don't go anywhere. You've got to watch this video. A lot of detail in here. Definitely want to check it out. Click it. I'll see you there.